Republicans have a 70% chance now of winning the Senate, according to online prediction market PredictIt. It's a big jump from 2 months ago when the odds hovered around 30%. If that holds, how should you be positioning your portfolio for divided government and potential gridlock? Let's bring in Citigroup U.S. equity strategist Scott Kroner from Wells Fargo and economist Michael Puglisi. It's great to have both of you here. Scott, are you telling your clients to do anything differently given the odds have changed about Republicans taking more control of certainly the House and potentially the Senate?
So the answer is no. We've been of the view that going into Q4 that we were set up for a risk-on rally into the year end, which is consistent with our 4,000 end of the year target. The midterms were part of that calculus, and the ongoing assumption that you'd have a split Congress we thought would be sort of a modest tailwind. The math is that over the succeeding year post-midterm elections, you do tend to see stronger S&P moves, on average up 20% or so. But we think that's more of a positive tail risk relative to the ongoing discussion around interest rates, earnings, and valuations as a result.
Which none of which is positive, right, Scott?
Well, we still have a few issues that we have to contend with. I'd say the Q3 earnings season was what we expected, earnings resilience with some fraying around the edges. Expectations for earnings for 23 still need to come down. We think that happens pretty aggressively going into Q1 with Q4 earnings reports. So again, the midterms have important context on this. We just don't think that they're going to be the ultimate market driver in the near term anyway.
Michael, I wonder what you guys at Wells Fargo are telling clients and investors. If the key drivers are the Fed and the economy, how the midterms and what Congress looks like will impact any of that, if at all.
Yeah, well, thanks for having me on, Sarah. And I agree with what Scott just said. The way I think about this is, I don't think you're going to see major revisions to economic forecasts like ours on the other side of the midterm elections. When I think about what happened in 2020, we did get major revisions to the economic outlook. Once it became clear that Democrats were going to have unified control of the House, the Senate, and the White House on the other side of those Georgia Senate elections, we made really big changes to our forecast for growth, inflation, the Fed, as a result of the American Rescue Plan, which ended up being nearly $2 trillion just 2 months after the Georgia senators were sat and Democrats had unified control. I don't expect those kinds of major election outcomes this time. And as a result, I don't see us making big changes to, say, our Fed forecast or our inflation forecast on the other side of Election Day tomorrow.
Scott, a lot of people say that it's a tailwind, that it's positive if Republicans do take some kind of control back and moderate the Biden administration, or a divided government is good. But doesn't it also increase the chance of a fiscal fight, a potential debt ceiling debacle, and another cliff?
Oh, yeah, there's still a lot to unfold on this. But what I would say is that I think the market's appreciating that too much fiscal stimulus isn't a great thing when you got the Fed trying to fight inflation. And so I do think this divided a government aspect of it, to the degree that it takes some of the edge off of that, is really what we want to focus on in the shorter term.
Michael, there are also important read-throughs in the midterms for the 2024 presidential election. Why Wall Street's going to be watching races like Ohio and Pennsylvania to see how the Trump handpicked candidates do and whether he'll potentially announce that he's running. How would the market take that?
Yeah, so there's still a long way away before we get to 2024 in terms of who's going to run, what's the economic environment going to be, right? What's going to happen with the Fed and its fight against inflation. But I think that point is absolutely right, Sarah. When I think about the 2022 midterm elections, I'm not expecting a big shakeup, but 2024 could be a very different story with the potential, right, for first and foremost, you have a presidential election. We'll see what happens on the Republican side, of course. And then when you start to look a little bit past that in terms of policy implications, just to name a few examples, you have the Tax Cuts and Jobs Act, big parts of that expiring on the other side of that 2024 election, or the makeup of the FOMC as an example. Over the next 2 years, you just have one governor, Governor Cook's term up in January 2024. But come 2026, you've got Chair Powell, Vice Chair Brainerd, and a lot of other members that are going to have to be reappointed. So when I think about 2024, I do think that could be really market moving, and I think that's going to come into investors' focus next year.
We've got a lot of time to talk about that. Scott, thank you, and Michael as well.